Good morning and welcome to the Haven Financial Group radio show. I'm Larry Kallevig, founder and CEO of the Haven Financial Group. Feel free to give us a call anytime, 612-504-8400. Visit us online at havenfinancialgroup.com. All kinds of educational classes, Kim, coming up. I'll touch on a few of them during the course of the show. And today we got Kyle Thomas, certified financial planner on the Haven investment team. It's always good to have Kyle with us.
Hey, thanks for having me.
Kyle, good to have you here today. We're going to talk about persistent inflation. I don't know if anybody's looking forward to hearing about that subject, but it certainly is an important one when we're starting to think about retirement. Let's take a look at how we'll break the show down. First off, inflation now and what it means for your retirement. Then we want to talk about understanding your savings targets. We'll talk about the value of predictable income. And finally, retirement myths debunked, all of it as it relates to persistent, as we said, inflation, which, Kyle, I'm going to just start right with you. That does seem to be a term that is so true. It just feels like we cannot cut through this inflation issue.
Right. Yeah. It's been something that has been in our world since 2020, right when COVID happened, and never seemed to. We never were able to shake it off completely. So, and every single year since then, there's been news and noise around that, where we're thinking maybe it'll settle down, rates will settle down too. But we just haven't gotten to that point yet. And it seems like every year there's some kind of new event globally or domestically here that makes us change course from what we were planning to do.
Absolutely. Talk a little bit about just inflation as a whole, where it is now and where we've been and where we really would like to be when it comes to that.
Yeah. So currently, the index for inflation, we had some short-term relief, decreasing 0.4% in June, but the prices remain up 3.5% year over year. So this means that the retirement dollars, still may not stretch as far as they did a year ago. Hopefully, you're invested correctly and appropriately to take advantage of the markets, either stock market, bond market, or other types of investments that we have. Because when inflation is higher, stocks can typically, they do better as well. So, if we're allocated correctly, we could take advantage of that, even though we still don't like going into the stores and seeing things cost more, especially food, with the food prices increasing 0.2% in June alone, and then 3% year over year as well. So
sure,
everything's dependent on those global economics, right? This year it's been the Iran conflict. And when oil is not as in supply as it previously has been, the price goes up, right? That's just kind of the name of the game for economics. Well, when there's not a normal amount of oil that's needed, and those prices go up, everything else has to go up because the way food's transported is through utilizations of oil, right?
Sure,
so,
absolutely.
Everything is impacted by that specifically. So, it's where we're at right now, but hopefully as things settle down and there's not new events going on, we'd be able to get that inflation down again.
You bet. So we talked about the fact that energy is a real issue when it comes to those inflation numbers, and certainly that is something that impacts retirees. Let's talk specifically about some of the other places where we're seeing inflation and the impact that might have on retirees, and then we'll circle back with the idea of how you can protect against this. So number one, retirees like to travel a lot, and that has been a real issue.
Yeah, traveling, especially the airline industry. Those ticket prices went up a few months back by quite a bit, and I think airlines were even cutting some flights too. So, flying is expensive nowadays, and as well as driving. If you look at the pump, just down in Lakeville this past weekend, it was hovering around $4 a gallon, and I think a few weeks ago, we got as high as $4.20, $4.30, somewhere in there. But driving places, you're kind of checking your wallet
Sure,
too,
absolutely.
and seeing what that MPG is doing. At least I am. But
Housing costs for retirees. Housing costs for retirees. That's also another issue, isn't it?
Yeah. Shelters, they remain a primary driver of the longer term inflation. Those are up 3.3% over the past year.
Mm-hmm.
And that's a really important metric for retirees, if you're renting or moving or downsizing, because we see a lot of that. One of the biggest goals for our retirees when we meet with them and put their plan together is downsizing their home. Or moving somewhere else, and maybe selling their home and renting from someplace. So that matters a lot. And over 3% is definitely not where we want it to be long term.
You bet. And Kyle, one of the big issues here is that a lot of retirees are on a fixed income. As we see that inflation go up, I mean, this is just common sense, but I mean, as costs go up, chances are very good your fixed income is not going anywhere with it. And this is what really starts to eat into retirement dollars.
Yeah, absolutely. One of the biggest sources of retirement for retirees is pensions. And pensions, most of the time, are pretty static in terms of not getting an adjustment for inflation. Social Security, thankfully, does have that adjustment, but that adjustment doesn't happen until the next year. Right. So we'll get those announcements for 2027. We'll get that in December of this year. So that doesn't help you for the current year.
Sure.
Right. And so it's almost like a year delay in that at all times. So you're kind of behind the ball there. So yeah, most fixed sources of income for retirees do not get that adjustment, which just makes us need to plan around these things and what inflation could be in the future to make sure that we're going to be well funded still. And whatever happens, we have places where we can pull money from that isn't necessarily impacted by the inflation that we're seeing.
So there you go. Now you've hit on exactly where I was hoping we could go. So this is one of the, we've talked about this before, but this is a real key to financial retirement planning at Haven Financial Group. You guys do a really super job of planning for these inflationary times. And not all planners and not all retirement specialists do that. So talk us through, if you will, Kyle, how you sit down with a client and how you prepare for what could be in the future.
So we figure out what are the goals for each individual person. What are we trying to achieve? Are we trying to get maximum returns? Are we trying to have maximum protection? What are we going for? And how much of a cash flow do we need? Because if someone needs more of a cash flow, we're probably going to want to be a little more conservative because we don't want that cash flow that we're going to send out to go up and down like a roller coaster. Right. And then vice versa. If someone doesn't need as much, we can stick it out a little bit more. So we figure that out first, and then we find what portfolio works. And that portfolio is going to consist of diversified stocks, diversified bonds, but most importantly on the bond side, because that's going to be our protection, we're going to want to have some treasury inflation protected securities, which help in times of higher inflation, and they're treasury securities. So they're, some of the safest that you can invest in. But then also some fixed investments, some fixed index annuities, something that has a guaranteed rate of return that will not go down, even if stocks and bonds are down, just like in 2022. The best place to have your money in 2022 was a fixed index annuity. Why? Because that made anywhere from 3 to 5%. Stocks were down 20. The aggregate bond index was down 13. So if you had some money in a fixed index annuity, then when rates were rising, which who knows, we might get some rates rising this year. There was some votes to raise rates the last week. So that could happen this year. And bonds and stocks can get impacted by that with some volatility. Fixed index annuities do not.
Larry, protecting against inflation is really a key there at Haven Financial Group.
It is. We've always factored it in. It's a game changer. And let's face it, I don't care what age if you're listening, what age you're at, budgets have been affected. We've had to make some adjustments as well as people. Mentioned travel. Yeah, a lot of our clients love to travel. I was shocked to see that flights are up 26.5% in the last 12 months. My goodness sakes, who doesn't feel that if you're a traveler? Just going out to eat. I mean, where I've noticed it this year personally is my wife and I, as the girls have been home and the friends have been over, and the budget just has gone a lot higher and noticeable. And as it relates, as we close up this first segment, also these key summer months of inflation will drive what comes out in October when the Social Security Trust Fund comes and announces what the cost of living adjustment is going to be for Social Security for next year. So it's these months that will determine what that increase, or actually the increase isn't guaranteed, but what it would be. So we teach a lot of classes on Social Security and taxes, but planning, as you and I talk about every week, planning is the key. And if you're not planning, you might end up in the wrong place in retirement. And that's what we try to help people avoid.
Absolutely. So if you're listening right now and you're not sure if your retirement plans are inflation proof, or at least would help you during these times, maybe you're in retirement and you're starting to notice the dollars are getting a little more scarce, give the folks at Haven Financial Group a call, 612-504-8400. Let them take a look at your portfolio, or maybe you don't have one and you'd like to put one together to make sure that you're protected against these times when we watch inflation bounce around, sometimes getting a little bit higher than any of us would like to see it. Again, it's 612-504-8400. We're going to continue to talk with both Kyle and Larry about understanding your savings targets during these inflationary times right here on the Haven Financial Group Radio Show.